My name is Mike Sullivan. I'm a former IRS agent and teaching instructor. Welcome to my YouTube station. I get to be here at home making my YouTubes, not in an office anymore. I've worked thousands of IRS cases. I'm a national expert in tax resolution matters. I have been doing this, God, since 1973. So one of the reasons what I tell you is important is because I was the IRS. I didn't learn about this out of a book. I don't go to seminars. I have seminars actually called the Tax Mob. My team helps put those on. So yeah, it's important you understand. I'm going to talk about tax audits for the year 2025 and what's going to be hot on the IRS radar screen. Just so you know, IRS wants to go after low-hanging fruit. They don't want to have to fight to find information. They don't want to have to fight to get it. They want to know what's there, what's available, so they can eat their food and move on. So what are they going to do? I want you to know that IRS uses a series called DIF, Discriminatory Index Function. And what that means, it's a random selection of computer screening. Basically, returns are selected by a statistical formula, an algorithm. And basically what they do is they compare your returns with other people with similar AGI, similar where you live, similar with your zip code. They put all this together and they kick out this score called a DIF score, but it is nothing more than computer screening. That's basically what it is. What's going to be hot this year? Well, what are the items that IRS always looks at and all the time? They're with the self-employed this year. The self-employed people are always the target because they know that's where the most cheating or aggressiveness comes. How do you know that? Well, it's hard to cheat on a W-2 if you're a wage earner. You can take extra credits and do a couple things, but they're not. IRS isn't talking about big money there. They monitor those. They set people up for fraud that way if you're taking credits that you shouldn't. But basically, the number one person is the corporation, the partnership, and the sole proprietor. The higher the dollar return, the higher the dollar, more money the IRS is going to collect. And what happens really from there? There's related examinations. Once they go into your tax return, they find other money with someone else or work you've done with, and then all of a sudden, that becomes another issue as well there too. So I just want you to know IRS is very expansive. They can do whatever the hell they want, but this year they're going to be really concentrating on the self-employed person, corporation, and partnership. Thank you.